This is Rod Kusinen's Booman for Risk for September 24th, 2013. All times on the chart are Central Standard Time. We're going to make a more extensive video of today's market activity, so hope you stick around and examine the analysis with us. It's quite enlightening. We're going to first of all take a look at the low of the day, high of the day, and the retracement back to the low of the afternoon, and whether or not any of that was predictable. So let's start off there. We're going to turn our attention to a composite volume profile that we found to be quite useful. Now here's the day. It's right in here. These are 30-minute bars. Okay. We had been looking at this range between 90.75 and 88.5 for quite some time. Let's talk about why. You're not going to see any gap in the volume because this has been updated as of today, as have really all of the profiles have been updated. But what you don't see is what we've been eyeballing. There's two areas of low volume in here. I'm going to move our lines aside so that you can see this more clearly. You see this dip in the volume here as well as in here? That was the area that we were thinking this thing ought to be dropping into. Okay, so right in about there. So as the market dropped into that area today, we already expected some possible movement in the market to reverse once it dropped, to that low of 88.5 roughly. And we'll talk about how we knew that in just a few minutes. But let's look at the high. Okay. Move this line away as well. Notice the gap in here, and I'm calling it a gap. I'm just saying it's a low volume area in contrast to the rest. It's a low volume area. So when we look at that area right in there, which is at 1701, okay, right in there at about 1701, we can nail that more clearly with this. All right. Is it any wonder that the market came right back to that level today? Shouldn't surprise us. That's what happened. And there was your move. So she ran up from the low here up to the high. But now what about coming back here? Let's turn on one of our other indicators that will help us to see where that area actually was. And there you have it. From the high right down to this low value area. Market came right down to it, bounced off, and headed back up. Now I think it's coming back down. Incidentally, I think we're gonna drop lower. This pattern here didn't finish. We usually refer to it as a yellow day pattern, where the low of the afternoon exceeds the low of the morning. And when it doesn't, it usually does it in the overnight market or the beginning of the following day. But I'm expecting this to drop even further than the low of this morning. But here you can see it on the chart. It's right there. Okay. Now let's go ahead, eliminate that, and look at the premium and how the premium was very useful in predicting this move up. We're going to expand out the chart so that you can see have a little better resolution here. Okay. Now, if we can, let's expand out the premium here. All right, now we have several lines in here. Let's go ahead and explain them. We're going to look at the dotted yellow line that's right in about the middle of the premium. Today that line was at negative 680. If you don't know what that line represents, you should. You remember that is the fair value line. We have a buy threshold at negative 580 and a sell threshold at negative 8.00. Now on top of that, we establish certain pivot thresholds, as we refer to them, based upon actual observation of the premium at the time of a pivot. We're not going to go into a great deal of detail on how we arrive at these numbers, but it's by simple observation. And today, the upper pivot level pretty well maintained itself at negative 645 and the lower pivot level at negative 754. So let's talk about what happened as we moved into the low of the morning. Now, right as we were moving in, we started seeing new highs on the premium. These dots represent higher highs on the premium, and the premium as a leading indicator frequently will tell you when the reversals are about to take place. This is happening right as we moved into the low. So this trend was suggesting, yeah, we're going to start heading back up. And lo and behold, 928, boom, this market just takes off. Now, today there was a General Assembly of the United Nations. I know that Obama spoke this morning. I don't know when, and whether or not that had anything at all to do with it, I don't know. However, in any case, we already saw evidence that the premium was moving up, and boy, did it move up later. Just 9:20, in less than 10 minutes, that the market really took off. And when it did, at 9:29, it hit the buy threshold here. So you knew that this market was going to be going up once you saw that occur. And up it went, and it just didn't look back. Now, a couple of other things that could have been useful as the market moved down to the low. You could see the volume indicator here became divergent, right? There was a divergence. We have this low on the volume compared to the previous low. Higher low on the volume was indicative of a reversal. Let me show this to you on a tick chart because it's really clear on the tick chart. Yeah, take a look at the divergence here, all right? Low of the volume here compared to the low here. We're at a lower low here, higher low here. Big divergence. Oh my goodness, big divergence on the volume. So good, another good indicator of a change in market direction there. Now you don't always get divergence. That doesn't always happen. But here again, there's another divergence, just one tick off of the low. And you've got much higher volume taking place right in here. Okay, so that divergence was huge, because when we were back at this price before, right in here, that's where we were. Okay, that's your low here compared to your low here. That's a huge divergence. So up she goes. Now, as we move up into the first real good high of the morning, let's keep in mind how this market is moving how the premium is moving relative to the upper pivot threshold. The upper pivot threshold is used in this sense. If the premium is above that threshold, the chances that the market will continue to move up is very, very good. We really won't see much of a retracement down until the high of the premium is reached in conjunction with a higher high on the SPOOs, but a lower high on the premium, typically at or below the threshold level. So to put that into context, we'll just look at the highs of the premium right in here. Your highs are just almost every bar is above the high threshold. Here in particular, all right, that high is above the high threshold. So we can expect that the market will continue to go higher than it was on this bar. At that time it was 95.75. When we come back to 95.75, we get another higher high on the premium, this high being higher than the previous one. You can measure it, -606 versus -610, higher high. This is continuing to go up, and each bar is continuing to be, it's higher than the upper threshold. We go a little higher still here, we're still above the upper threshold. We go higher again here, we're above that upper threshold, and again in here. Now right in there, we're just barely above that upper threshold. Okay, on that last bar, we're below it. Now, for that reason, this looked very conspicuous as a potential price where we could expect the market to drop. Furthermore, at that same time, we began to see some evidence of a drop in the premium that was forming. We've got lower lows on the premium in here. Now, of course, you didn't know what was about to occur here, but we'll show you why that's significant in just a minute. But right in here, you could see, all right, this was dropping below the upper threshold, so this market should come down. In conjunction with that, you had lower lows on the premium, so that was very telling. In addition to all that, just before that move up, we had what we refer to as a range bar here. We won't spend much time on this, but a range bar in this case is calculated as being the difference between the low of the bar and the high of the bar, and where that difference is is equal to or greater than 2 ticks, we watch those bars very carefully, because the tendency is for the market to intersect the difference between the high and the low on a subsequent bar. And when it doesn't happen quickly, if it doesn't happen quickly, we're going to paint that bar, because the probability is it's going to come back down. And you see that did occur right in here. It split the difference between the high and the low of that bar, right here, and then again right in here, right in there. Well, and then in fact this bar, we have another range bar over here. We'll talk about the range bars a little later, but it was just something that was a heads up. But in any case, the bigger heads up is what's happening to the premium. All right, so it's below the upper threshold, and we've got a trend down in the premium forming right there. On that bar here, we have a lower low on the premium. It's what we refer to as a naked bar. That naked bar means there's no divergence there. So if the market goes up after that point, we can rest assured it's coming right back down. And that's what you see occur. So we managed to tick up a couple of more ticks above the previous high. We come to 99.5, and you can see that the highs of the premium at this point in time, those highs are below the upper threshold. And then when it tests that high again, right in here, we're way below the upper threshold. In fact, we're barely at fair value on that high. This thing is coming down. And down she comes, breaks the low here, and right as it's dropping into that low, you get another lower low. That is very, very typical. At the exact same price, the premium drops again. You see that happen all the time. So now we come into this low here at 96.25. And look at the lower threshold and this bar on the premium. That bar on the premium is above the lower threshold. Possibility is that this market may go back up. But what we don't see is we don't see really any trend in terms of the premium showing us any valid reason to expect this thing is going to rally back up. Nonetheless, look carefully at where the premium is in conjunction with the upper value area. I'm going to expand this out so that you can see it real clearly. All right, so we get above the upper value area on this bar. So we could go a little bit higher. And when we do, on the very next bar that we have an equal high, premium drops, there's your divergence, and down it comes again. This thing is not going to sustain a move up unless it gets above that upper value or that upper threshold area, which in fact occurs right in here. These two bars are above that upper threshold. Now you got a range bar in here, so possible retracement is on the way. But as this thing moves up, we're above the threshold, so it should go a little bit higher. It does on that bar, but on the very next bar that tags that same high, once again, we're below the threshold level, and down she comes. Now, as it does, it leaves another range bar in here, so we can expect some kind of a retracement, which does in fact occur right over here. But let's now look more carefully about what we see happening with the premium. Okay, so we've got this trend developing, lower lows on the premium, lower low on the premium here, again another lower low here. Right? So that's indicating that, yeah, this thing should be dropping, and it does drop. But once it does, and it comes back to that level at 96.25, the premium is not down at that threshold level. So we can really expect that right there, we've got sufficient divergence to expect the market to go back up. And up it goes. Now, do we have anything that's suggesting that the market's going to continue a rally up? Right now, we don't. We don't have anything that's really telling us that. But let's see what develops here. We said that in order for the market to continue to sustain a move up, the bars have to get above the threshold level. Similarly, if the market is going to sustain a move down, the lows have to get down to that, and exceed the lower threshold level. So when the market moves up here on the divergence of that bar, and we get a little bit of a drop in the premium here, she drops a little bit lower. But the lows in here, all right, the lows of the premium are nowhere near They're nowhere near the low threshold. And while the highs are barely above fair value, the lows are not particularly low either. So we see really the market's not moving at all. And then we begin to see the highs of the premium are starting to move higher, above fair value. The lows are not anywhere near the threshold level. And right in here, you see how the premium is increasing again? Let's chart that out. Right here, we'll start that off at about 1122. We're just going to go into our indicator here. Change the time so that we can see that more clearly. And there you have it. Newer highs on the premium. Up, up, up she goes. Okay? Higher highs. As we hit 1700, okay? As we hit 1700, once again, the highs of the premium are below the upper threshold. Likely this market will come down because of that. However, if it's going to continue to move down, the lows need to move down toward that lower threshold. Do they? No, they don't. Okay? So as we move down here, we get that period where we haven't gone any lower, but just as we move into these lows here at 98.25, look at the premium. Look at the lows of the premium. Higher lows on the premium. Equal lows on the SPOOs. Okay? So if we measure from these lows, we're going to look at the premium again at 1204. We're getting higher highs on the premium again. Higher lows on the SPOOs. So, pardon me, higher lows on the premium, higher highs on the premium. The market's going to be moving back up. And that's what you see happen here. Right in here, we briefly get above our threshold level. We're not at the threshold level here, so we're not moving very well. And we start to drift back down. And then right in here once again, we get new highs on the premium. But as we do, okay, we're going to chart this out from right in here, 1727. Look at what's happening to the lows. $12.27. Market is moving up, but what's happening to the premium? Premium is moving down. Okay, premium is moving down. So that should be a heads up. And right as we move into the high of the morning, the high of the day, really, we get this new high on the premium, get a higher high on the SPOOs, a higher high still, and when we hit 1701, where's the high of the premium? The high of the premium is below the threshold line again. Similarly, we've got a developing downtrend on the premium that preceded the high. Classic evidence that the premium is telling us the market's going to come back down. Now, how far down is it going to come? At that point in time, we don't know. We don't have anything on the premium here that's really giving us a heads up as to how far down this will go. but that this should be shorted is pretty clear. Now watch the premium carefully as we continue to move down. Another new low on the premium here. Market continues to move down. We briefly get above the threshold level here. Market moves up into a divergence here. Premium is below the threshold, so down she comes. And as we do, we get another low on the premium there. All right, we come down to this point, and we're not at the threshold line. So the market begins to move back up. We go above the threshold here, we take one more tick above it, and we're back down below the threshold. There's nothing there to sustain the move up, so we're going to once again start to chart the premium at this point here where we have the reversal. We've already gone lower than this bar, so we're going to chart the premium again here at 1318. Premium continues to drop. We've got a range bar there. That's split right in here, just as we normally expect it will. But we're getting lower lows on the premium as the market moves up. So we should expect to see the market drop below 96.75. As it moves down, we get another low on the premium right at 96.75 again. Now, it does drop, and you see this big divergence in here. It's just not enough to sustain this thing down, and so it moves up. We get above the threshold briefly, and then the bars are below the threshold once again. Market is coming down. It does, and now we really begin to drop toward the threshold level. Really begins to drop. But we get a little bit of a heads up here, moves up above the threshold briefly, divergence, moves back down, and then we get this nice move up on the premium right in here, way above the threshold level. So that sustains itself again. We don't get any higher than 97.50. We need to be at or below the threshold level when this thing drops. We're below it right here on this bar. All right, that's below the threshold level. We test it again here, and then the next bar is below the threshold level. So there you have your divergence at that price, and down she comes again. So what we do here, let's explain how we're going to use the indicator to read the premium. Once the premium drops and the SPOOs drop at or below that price that was predicted by the premium, the predictive value of the premium at that point in time has been achieved. So we need to reset. We need to reset that indicator. And we can reset the indicator really at this point in time. We've tested 95.25 again, and the premium hasn't gone any lower. So we can test these lows at 14.12. We'll just reset our indicator here and look for new lows on the premium again. So right as we test that low, 95.25, what happens? We get lower lows on the premium again, and this time they're below the threshold level. So we're going to see this thing drop some more, and by this time now the volume is really picking up. It's dropping this thing way down to our low right in here, which, as we talked about previously, was associated with that low value area, at which point in time premium is now moving back up. We have these new highs moving above the threshold level right in here. So 94.25. All right, market looks like it ought to return to that price. We'll just draw a line there, 94.25. Didn't make it. And here we are at the close, so the premium at this point in time is no longer valid. Actually that bar on the premium is valid. Okay, so let's just talk about this exception to the rule. We have the higher highs on the premium here associated with this price at 94. Now the caveat to the premium rule is that if the premium goes higher, we reset the price at which we expect the market to move, and that bar on the premium is valid. We haven't closed yet, but now we're closed. We can say, yeah, it should go above 91.75. It does, but at this point in time the premium is no longer valid. So at the best that we could expect was right in here. So that's our analysis for the day. Some great things happening on the premium. Very useful information if you know how to read it. We're one of the only places in the world that will teach you how to read the premium. If you know how to read the premium, you will know how to read the market. Now there are some other indicators that we place great emphasis and great value on. Some of our volume profile indicators are marvelous. So we use that in conjunction with these other indicators for analyzing how the market should be moving and where it should go. Great day for trading. Come visit us at rsksys.com. Give us a call. We'll give you a demo. We've got some very useful information for you. So this is Rod Kusin and Spooman for Risk.